Hello and welcome back to Green Pips FX. And on this video, guys, I'm gonna be talking about this deadly scalping strategy that I just found. Now, lo and behold, let's get into the video. Now, first and foremost, we need to know where we exist in the market, right? And I myself, I'm a day trader, right? And I particularly trade the New York session, which in my time opens around 9:30 p.m. to about 2 p.m. In the night, right? So with that being said, so this is where I come into the charts and start looking now for opportunities, where to position myself in case of a trend, right? I'll be looking for those areas of demand or supply, which others may call them order blocks, to position myself and get in accordance with the trend, right? So coming onto today's market, right? So this is the USD chef pair. This is the trade that I particularly want to talk about. So coming into today's market, right? So let's just go to the 5-minute chart and see how structure aligned very beautifully. So first and foremost, price had this this range here, right? Price formed this range, which was broken on both sides, so liquidity was taken. Now I just came into the market at these hours here, here at 15 hours 30 minutes, right? And at that time price had already made this high here, and price had already come down and make this break of structure right here, forming this low here, right? So let's just put proper drawings in there. So price formed this low, came in and formed this high here, right? So now let's just start to follow structure. We can just remove these and put in some proper drawings, like I said before, right? So we had a high that came and took out this low here, so making this a strong high. And from that being a strong high, then we know that this is a potential break of structure to the downside, that the market is now shifting from this previously initiated bullish trend into a newly initiated bearish trend. And from there, price now continued to make a series of so from there, let's just term it low, right, high, and then a low there, a high there, a lower low, right, lower high, lower low, lower high, and lower low. So from this area here, this is when I come into the market, right? So I was particularly positioned that I just found this price action at this little man here. So it's 15 hours 30. It's just the open of a session, and we know when a session is opening, there is a potential liquidation of either a previous high, right? We like to see schematics like this being put into place, right? You'll see something like this happening, and then price could go on with the trend, right, liquidating this high here as a liquidity high, right, with a potential unmitigated S&D zone above it. Now that's what exactly I saw in here, right? Because if we take a proper look at this, you'll find that. So let's just move this little man to here. This is where I was practically, boom, right? So this so price made a high, a low, a lower high right here, and then a lower low, right? Now if we come to look at that point of mitigation and which order blocks are strong and which are not, right? Which S&D zones are more valid than others, right? We'll come to look at this place, right, at this previous trend here, that in this, from this high here to this low here, we only had imbalances in one area, right, which is this area here. Those imbalances from there to there, right? This price gap in here. This was the only price gap existing, right? Yet price makes a pullback, and this this whole gap here is never touched, so this is still not yet filled, right? So price breaking this structural low right before the session opens means what, right? It's leaving these highs here as potential liquidity highs. the highs that will come to be taken out, because people have sold in these areas and the stops are resting above here, right? The same place where there's what price gaps, and above those price gaps there's what there's an area of supply that's still not yet mitigated, meaning what there are tons of orders here left by smart money that need to be filled before this price can go. So this is a very strong confluence, and a very strong reason for price to head back into this area here, right? Do that liquidation and that mitigation, and from there, that's a very, very good point to have your sales and take this price down. So that's what I was particularly looking at, right? So I just placed I just boxed this area here. I just had my alert open, and sorry, this trade just moved. Let me just find it there. We'll just put it there, right? Just want to have this accurate, and there we have it, right? So this right here, just there, this was the trade, right? So let me just log it. You know, shifting time frames makes these drawings move if you don't lock them, so you know, it is what it is. So at this point, what price did was, you know, like I said before, price just left this area here as what, as liquidity highs, right? So these right here were pretty much all this was pretty much just liquidity resting in this area. So with liquidity resting there and what imbalances above that liquidity with a potentially unmitigated what supply zone, right? That was more than enough reason for me to have my sales being eyed up in here, and that's what exactly price did, right? So price came in there, took the sales, right? Now, of course, I did refine this more, right? I just went to the 1 minute time frame, because you know it's scalping, right? We don't want to have big zones like this, right? So I just refined this little area in here into a much more steepened area, right? So this whole up move here is what we call our supply zone or our bearish order block from the 5-minute chart. So what we do is try to find that potential last up move before the down move within the 1-minute chart to reduce this 5-minute order block, right? And what we saw was this last white candle in here, which is, you know, the buy candle for me. So the last buy candle before the bullish move started. So that's where my refinement lied, and this is where my entry was pretty much based, right? So let me just unlock it there and show you the extent of refinement and its benefits, right? So there's my entry. So as you can see now, I did say before that these highs here just rested as liquidity highs, and now as you can see, so price accumulates right at the session opens, shoots up, it doesn't touch our, you know, our most refined S&D zone, comes down, also fails to break a low, right? And then comes up, liquidates this this high. Why? Because this high here, it was early sellers who positioned themselves after this down move, and then this intermediary retest in here. People sold really hard in here and, you know, had their stops just above this high. So this is price coming up to take these buy stops here, and, you know, price triggering down, you know, like a torpedo, because that's what happened. And of course I was looking to target so this was a 15-minute area. So I was looking to target this area here. Why? Because this area was pretty much in its overall context, right, the last place that smart money sold before they bought really hard to come and form this high here. So I later on refined this, you know, to the last bearish candle before the overall bullish move started, and that was my take profit target, with a trade of a 1.7 pip stop loss with a 55.7 pip take profit target, to make it a total of 1 to 32 RR trade. Now I hope this video was very informative to you, and if it was, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next one guys, stay safe, have a nice trading week, and of course, peace out.